Retirement System Board meeting on December 9th, 2020 at 12 p.m. This will be an electronic remote participation meeting via GoToMeeting. And let's start with a roll call. Trustee Gordon.
Here.
Trustee Bovensep.
Here.
Trustee Hamilton.
Here.
Trustee Miller.
Here.
Trustee Novak.
Our radio's going off here.
Trustee Malizik's here. And let's just note that Chairman Calise is not here right now, and he may be joining us soon. Okay. Shazia's told me that there is no public comment for today. Is that correct, Shazia?
Yes.
Okay, thank you, Shazia. And then we have the minutes from the November 11, 2020 meeting. I would need a motion and a second.
I'll make a motion to move the minutes.
Motion by Hamilton.
Second, Miller.
Second by Miller. Any discussion? All right, let's do a roll call. Trustee Hamilton.
Yes.
Trustee Miller.
Yes.
Trustee Novak.
Yes.
Trustee Bovensep.
Yes.
Trustee Gordon.
Yes.
Trustee Malzik's a yes, pass 6-0. All right, there are no retirements this month. Next month we will have a couple for sure. And I guess before I moved on, I just wanted to say, where are you? Justin, this is your last meeting officially, correct?
Yes.
Yeah. So I just wanted to say thank you very much for your service. How long were you on the board?
Oh, I don't know. A couple of years.
A couple of years.
Long enough to be hassled.
Well, we appreciate your service, and I won't repeat what you said, but thanks. I appreciate that. And I wanted to welcome Pete Dungeon, who will be starting in January. So, Pete, you have to get sworn in yet by our city clerk. Is that correct?
I believe so. I haven't spoken with her yet. I just got the announcement the other day, and Justin kind of sent me some information to get me up to speed. So I'm just attending to get an idea of what's going on.
Great. Well, welcome. We appreciate you, volunteering, and we're looking forward to working with you.
It was a hard-fought campaign, but I came through.
I saw it was really close. Yeah. Okay. Moving on to regular business. We're going to go with UBS today because they have a conflict and they have to move on. They can't stand for the whole meeting. So we're going with UBS first. So if you could get started, where were we at? Darren, you're going to present, correct?
Robert, it's Becky. I'm just going to add a couple comments and I'm going to basically turn it over to Darren, if that's okay with everybody.
Perfect.
Okay. So one, just to say hello to everybody. Justin, I'm sorry to see you go. It's been wonderful to work with you these last few years. I have been diagnosed with COVID and I'm not feeling great today. So I talked to Rob earlier and actually I talked to Rob a couple of days ago about perhaps going. Daughter from Boston is in town. My husband picked her up at the airport yesterday about the same time I was getting my COVID positive notice. So I'm running a little fever today, not feeling great. So I'm going to kind of sit on the sidelines. I'll be here to help Darren with questions, although Darren really doesn't need but just wanted to be here for the meeting. So I wanted to say happy holidays to all of you. Appreciate all of your support, the work that you do. And it's been a really interesting doing this for 30, probably the most interesting of my career. So I wish everybody well. Hope you stay healthy and looking forward to seeing everybody back in October. So I'm going to mute myself, but I'll be on. Thank you.
Hey, Rob.
Go ahead, Justin.
Yeah, just for clarification, and I'm on my phone at my desk, I said hassle, Hassle, just so there's no miscommunications.
Okay.
With an A.
Okay. Well, hello, everyone. We hope that your families are doing well. This year is almost to its end, and what a year it's been. If you told us in March that we would still be in a lockdown from COVID and have experienced one of the most contentious elections in history, and that the S&P would be up 16%, would you believe that? We appreciate the board's ability to continue to take this long-term approach and stay the course. It has certainly helped you in this year. As we move forward, UBS has a positive view on equities, but with added volatility, especially as we deal with the current COVID wave, which continues to threaten our economic recovery and expansion. It's clear that our economy and citizens have faced a wide range of COVID experiences. Those, as such, I'm able, and Becky and I are able to work from home. There are the frontline workers, many of you included in that, healthcare workers, and those even at the grocery stores and in other businesses. You guys put your life on the line every day, and we appreciate that. There's also a large group of people that have lost jobs, homes, and perhaps loved ones. Many companies have closed or will close, and people are struggling. It's clear that a stimulus package is needed to continue. There are too many people suffering. I think at the last thought, it's about $960 billion is being currently talked about. And we are hoping that is approved on or just after the inauguration. Going forward, we are optimistic and anticipate a wide rollout of this vaccine by mid-2021. And we expect the pandemic will wind down by year end. And there's certainly a pent-up demand that should be good for the economy. We anticipate corporate earnings will return to pre-pandemic highs by year end. And disruption, as we have had this year, also leads to new innovation. We've seen that in the pharmaceutical development, therapeutic innovation, and healthcare, and especially in telemedicine. Markets have accepted the bind and win and tend to like Janet Yellen as the Treasury Secretary. The Fed is likely to remain accommodative going forward, and we expect the political rhetoric to calm down a bit. But it's clear we have a continuing divide in the nation, and all what that means is all voices need to be heard going forward. Economically, we believe interest rates will stay low. 10-year treasuries below 1%. I think it's at 95 basis points as I last look, and inflation fears are muted. The dollar will likely grow weaker going forward. We favor mid-cap and global equities going forward in the current economic environment, as we see a rotation into value and favoring cyclical stocks. Overall, we expect returns to be muted as investors continue to look at equities versus low yielding cash and bonds. This will increase risk over the short term. That's is okay, assuming investors understand the relationship between risk and time. Short-term cash should be looked at as a low-risk, short-term investment to mitigate risk. But overall, we continue to favor a well-balanced, high-quality portfolio, offering the best way to meet your long-term investment success. Next, I will go into the performance So as of November 30th, for the month of November, the portfolio was up 8.23%, which is about 9.2 million in market value gain between dividends and interest and market appreciation. For the quarter, the portfolio was up 7.18, and that with dividends and interest is a gain of about 8.1 million. Year to date, overall, the portfolio is up 12.5%. And that's versus the benchmark of the MSCI All Cap World at 70% and Barclays Ag at 10.45%, with about over a $13 million gain year to date. 1 year, the portfolio has returned about 15.05%, which is an appreciation of 13 million and an additional dividends and interest of 2.77 million. So overall, 1 year appreciation of 15.7 million. Looking out 3 years, the portfolio is annualizing out at 11.49%. 5 years at 11.38%. And actually, I didn't go over the benchmark. The 3-year benchmark is 8.13. And again, that's looking versus the portfolio at 11.49. The 5-year, 11.38 versus the benchmark at 9.13. 7 years, 9.52 versus 7.32 and the benchmark. 10 years, 9.99 annualized versus 8.02, and since inception, which goes back when we began this performance reporting, back to 8.6% annualized versus the benchmark at 8.2. The allocation, if we're going to go 2 more pages in, 1 more page there. So cash is at 5.75% or $6.8 million. The fixed income sleeve is 28.8% or $34.125 million, of which the U.S. is 24.44 and the global at 3.37 and international at about 1%. The equity sleeve is at 65.38%, or just over 77.4 million, with U.S. being 55, large cap at 37, mid cap just over 14%, small cap at 4.66%, and international at 9.53, with emerging markets at 2.54%. Any questions on the overall portfolio? And this is, again, the combination of the ERS and the NAIC portfolio. I'll next go in. Yes.
Yeah, so we just wanted to bring up, I know you're going to talk about it a little bit later, but we have over $6 million in cash, and we're going to come up with a proposal. I'm just telling the board today to hopefully invest about $4 million of that.
Okay.
Go ahead.
Sure. I'm going to go to the next section, which just looks at the ERS. There we go. So month to date for the month of November, the portfolio was up 7.9%. For the quarter, 7.23%. Year to date, 11.84%. 1 year at 14.26. 3 year, 10.46, and that's annualized. The 5-year return, 10.84% annualized. 7 years, 8.73% annualized. 10 years, 9.03. And since inception, going back to the end of 2002, 8.08% annualized. The allocation on the ERS is more conservative than the overall. If we go to the next page. So cash is at 142,000 or much less. It's 0.16% of the overall. Fixed income at 37.2%. The equity sleeve is at 62.62%, with large cap being 30%, mid cap just over 6%, small cap at 7%. The international sleeve at 10.83, with emerging markets at 4.56. Any questions there? The next section is the NAIC portfolio. And if we look at this, this is for the month of November, was up 9.38%. For the quarter, positive 7.02%. Year to date, 14.79%. The 1 year return at 17.83%. 3 years annualizing out at 15.37%. The 5 year 13.28%. The 7 year 13.26 annualized. The 10 year 14.88%. And inception to date 11.51 annualized. And if we look at the allocation, which would be on the following page, just over $6 million in cash, and the equity sleeve is at 77.83, with large cap being 44%, the mid cap being at 25%, small cap at 5.89, and international at 1.8%. So overall, this has been a big part of the equity sleeve. You'll see higher returns in this portfolio as compared to the ERS. But overall, combined, good returns for the month of November as well as year to date, given everything that we've seen. Are there any questions that I can answer? No? We do have some options that are, there we go. And Rob, do you want to approve those, or?
Yeah, what we'll do is, Darren, is we can approve those at the end with any other stock recommendations, unless anyone on the board has any questions on these. Go ahead, Darren.
Okay. The last piece is the stock recommendations that came through the, So there are, I believe, 8, 9, 10, 11 different stocks covered in this.
Yeah. And Darren, what in a little bit, I've talked to Rob quite a bit over the last couple of weeks regarding the NAIC account. As everybody knows, we really don't make recommendations on this because you're using the NAIC's process, but we do research behind the scenes to the extent we can, based on UBS's research and the outside firm that we work, CFRA, monitoring what they recommend and what they would say on stocks that you hold. So Rob and I looked at the list of potential buys that were put out by NAIC and then compared those to see what we liked at either UBS or the outside research that we purchased. And that's where we came up with these potential names to add to the portfolio. We've got an awful lot of cash because we had several sales last month, which included 2 that were directly from NAIC where they were no longer following Roper and Stryker. And we actually have that again this month. Old Dominion Freight, NAIC is recommending a sell, and I know we've talked about that quite a bit. The same thing, they're recommending a sell on that. And then back in March, NAIC had recommended a sell of Danaher, and we did not sell it because the market was just taking a tumble back in March. Here we are at the end of the year, and as Darren said earlier, portfolio has done incredibly well. Portfolio, actually, the overall as of last night is up 16.6%, and that S&P is up about 16% also. So you've got a lot of money in cash, and if you were to follow NAIC for these other 3 sells, you've got some money that probably should be invested. So,
right.
Then go back and.
So, go ahead, Becky. I'm sorry.
So I was just going to mute myself again so I don't pick up any outside noise as you and Darren and the group speak.
So Becky just explained the process that we went through along with the NAIC process and then also UBS and CFRA guidance. In the top 8 stocks that are on the left-hand side there, from AKAM all the way down to UNH, we have those as 8 stocks that we think are buys. And what I would put out as a proposal would be to purchase all 8 of those stocks at $500,000 each to put $4 million of funds to work, leaving $2 million in cash, and then those other 3 stocks to hold at this point. And that would be my proposal. Just didn't know if anyone wanted to discuss that at all. Go ahead, Justin.
My mouse does not work on my phone. Yeah, I was looking at, this is the separate sheet that you got that started out with the Akima Technologies, correct?
Correct.
Okay. Yeah, I was looking at it, and it makes sense now. Was it the Cognex that NAIC said to go ahead and sell because it's topped out, with Danaher also kind of high, and then Old Dominion. As I look through that, I think we were originally going to be selling it like $1.60. It's up to what, $2.10-ish. I also reread the NAIC recommendation on that, and I can't argue with. I liked keeping it at the time because they were an established shipping company, but now we're getting to the point where
We're losing you a bit, Justin.
all the subcontractors of subcontractors for Amazon and the hubs are in, and I would have to agree with NAIC's. It's overvalued for what it is. If we're going to go down stock by stock on what we're going to buy, or if you're going to go with those first 8 recommending to buy, and then we'll discuss the last 3, those last 3 about whether or not we're going to hold or sell. I think that would be warranted. I don't know if we want to have a discussion first, if you want me to just motion to buy the $4 million.
Yeah, Justin, you can make a motion if you'd like, and then we can discuss it. Am I hearing you that you're saying that you would recommend selling the bottom 3 and then buying the top 8. Is that what I heard?
That's what I was looking at. That was in agreement with what you were looking at, correct?
Right. My take was that those bottom 3, I wasn't going to do anything with this month, but they do follow, like you said, they do follow our NAIC guidance to sell them. So if you guys want to move forward with that, I would not be adverse to that. Just know then I think we're going to have, another heavy cash position unless we want to increase the amount we spend on these 8 buys.
Yeah, I would say let's do the 8 buys with the 4 million plus the proceeds from the 3. How does everyone feel about that?
That makes a lot of sense.
That would work for me. Like I said, going through those last 3, it's time. They've made a lot of money, and as before and as we're doing now, probably time to reinvest. But yeah, they're all pretty tapped out. I'd have to agree with you, Dave.
Okay. So
Okay,
if
I'll make that a formal motion, unless you want to make it, Justin, since it was your proposal. But I'll move that we buy the top 8 with the 4 million plus the proceeds from selling the bottom 3. Is that specific enough?
And Councilman, that's to take the proceeds and divide it equally among the 8, correct?
Correct. Yes. Okay. Plus the 4 million in cash. Yes.
Okay. Justin, is that a second for you?
Correct. I'll second. Just specifying it's the Cognex, Old Dominion, and Danaher that we were going to sell and use the proceeds of. Correct.
Correct.
Correct. Yes.
Okay. So I have a motion and a second. Is there any other discussion?
Hey, Rob, just a question on cash. Is this just cash that's kept as cash, or is this cash that we use to fund the DB system to pay out to our retirees?
Yes, that cash would be available to when we have to make a semi-annual contribution to the fund, to the general fund to pay retirees. Correct.
Just if you know off the top of your head, round numbers, what is that contribution?
Yeah, it's actually about $1 million a month. So lately what we've been doing is twice a year in June and in December, we ask both Morgan Stanley and UBS for $3 million each. So it's about 12 million total for the full year.
Thank you.
Rob,
You're welcome.
Rob, this is Mark. Just to clarify, the general fund fronts the payments, and then the retirement system reimburses the general fund twice a year.
Correct. Correct. Any other discussion? Okay, seeing none, let's call the motion. Let's go. Trustee Hamilton.
Yes.
Trustee Novak.
Yes.
Trustee Miller.
Yes.
Trustee Bovensup.
Yes.
Trustee Gordon.
Yes.
And Trustee Malzik's a yes. Item passed 6-0. Darren, are you clear on the direction?
Yeah, so I'm using stale prices here, but the sell of Old Dominion's approximately 640,000, but this is looking as of November.
You know what, Darren, I set up on my screen.
Yeah.
So Old Dominion now, sorry, I'm blurring my words a little bit with my fever. Old Dominion's about 650. Cognex is about 620. And Danaher is $1,785,000. So you're going to end up with, close to or around 3 million. Just adding this in my head, more than that, or right around that, about 3 million. So you're going to be ending up with about 7 million altogether in these 8 stocks. So wanted to bring that to everybody's attention.
Okay. All right, Darren.
So we're going to be buying these 8 stocks at about $7 million. That's approximately 7 million divided by 8. It's about 875,000 per buy. Does that sound about right?
Yeah.
Okay.
Do we need any action on the options, or are those good to go?
Hey, Becky, have we always gotten board approval for these options or no? I don't remember.
I always forget.
Rob, typically you have the authorization to approve, but you usually would let the board know and make sure there were no.
Okay.
Yeah, sounds good to me.
Sounds good. So move forward with those two then.
Okay. I think we are complete then. I appreciate the board's time, and do you want us to stick around, or I can stick around, but Becky can drop off?
Darren, why don't you stick around, and then and Becky, on behalf of the board and myself, I just want to say good luck, and I'm so sorry that this has happened to you, and we wish you the best.
Thanks. It's actually the second time it's happened to me, so I do think we can get it twice. I'll be fine. I have a daughter who's immune compromised and has asthma, who unfortunately I exposed this to her on Sunday, and she's feeling some ill effects today. So I'll be fine. I hope she will be too, and I hope all of you, take care as you're out there, and I hope you have a wonderful holiday season. So I look forward to seeing you in January. Take care, everybody. I'm going to drop off. So thank you, and thanks for everything this year, and being wonderful to get through what was a difficult year. So appreciate everybody's patience.
Thank you, Becky. Thank you, Becky. Get some rest. Okay, bye.
Okay, bye.
All right, and so Darren, we're all set with UBS now. Tim, we're going to move to Morgan Stanley, and as we've sort of got a overriding picture of the economy. Unless you have something different to say, do you want to give us some results, and then also some your recommendation for changing the investment portfolio as well?
Yeah. The only thing I'd like to add, I guess, is, and Darren touched on this, and I think a lot of our comments are fairly similar about views on the market. We still see 2021 having 10% upside to the market. We've gotten through some of the risks that were there probably prior to the election. We're not fully through those, but we have seen a big change in leadership. So just to give you some idea, since the election, and I heard Darren say they like mid-cap stocks, so that would be one I would point out. The Russell 2500, right, which measures small to mid-cap stocks, since the election is up 17.3%. We, in some of our work, have said there's going to be areas like this that do better when people start to feel better about the economy picking up, us coming through this, us getting out of this recession. The Russell 1000 value, which has obviously been a laggard since the election, though, is up 12.3%. EAFE, which is the developed areas of the international markets, up 13.3%, and emerging markets up 12% since the election. So you've seen some of these areas that we've talked about. The dollar has come down. That's helped international. That may continue to happen. Some of the areas of the market that got hurt the most, that are more economically sensitive when we had to shut down the economy, seem to be picking up some steam. So this leadership, and that's one of the main things we did include for you, our 2021 look ahead. While we think, stocks in general do 10%, we think there's probably better returns even than that to be had in some of those areas that I just pointed out. Now, we did send over a report to you. I've actually got a more current report through the 4th, so last Friday. Just to let you know, the portfolio at that point in time was up over $101 million. That meant quarter to date you were up 10.02, and that meant year to date you were up 11.2. And what you can start to see from our portfolio, I would say, in that through Friday's numbers, is we would have expected a return for the quarter to date of about 8.5. So it's those areas like international and small cap and some of those value names that have really started to pick up and perform much better. And it's had a direct impact, I think, on all portfolios, but definitely has had a very nice impact on the portfolio here. If you'd have told me after first quarter, and I heard the numbers that you have from the UBS portfolio, but if you had told me that any of them would have reached double digits by near year end after the way we started this year, I would have told you that would be hard to believe. But based on what the Fed has done and what they did with the CARES Act and what we hope we'll see, we as well are in that camp that we think there needs to be another piece of stimulus. Those are all the things right now, I think, that are getting the market to these higher levels. And this is the important part, and I think changing the leadership in what is actually outperforming or performing best in the markets right now. Any questions on any of that? Just to let you know, in our portfolio year to date, cash flows been negative $4,791,288. Your investment earnings have been just shy of $9.9 million. So once again, when you think back to where we were at the first quarter of this year, your patience and your movements within the portfolio have worked out quite well, and I think we're going to continue to have to stay on that, as we maybe always do, to make sure that we get the best return we can while minimizing the risk in the overall portfolio as well. Any questions on any of that? No? Okay. So then we also had put a rebalance piece in there. And basically the rebalance is necessary because you've gotten outside of your, total equity exposure in terms of the portfolio on the equity side has grown. So what we were talking about doing is taking a couple million out of equities, putting some of it into fixed income. So the red on that chart is where we would take it from pretty evenly, particularly in that, large cap area. And then moving some into fixed income where we're down toward, below our target. And that's probably only continuing to happen since the end of November. And then a little bit into Reits, real estate investment trusts. Now, that has been an area that has come under a lot of pressure, but it seems to have solidified. At 500,000, we're not putting a lot there, but it is an asset class where you have some room. And if you remember from when we did the asset allocation study with you, it was one of the asset classes where we saw rates of return over the next 5 to 7 years, somewhere in that 8 to 8.5% range. Those would be very good returns from an asset allocation perspective over the next few years. So we want to add a little bit there, not too much though, because we're going to continue to watch and see this recovery. But remember too, REITs aren't just office space. They can be in medical space. They can be in warehouse. They can be in multifamily housing. So they can be in a lot of different areas where we think there's still a lot of upside there. And we think, maybe a lot of the downside has already been baked into some of the other areas within REITs. So that would be the rebalance that we would be recommending right now. And that really came on because of the very strong performance that we've seen in the markets since the election. Any questions on the rebalance?
Does anyone have any questions for Tim as it relates to this rebalance? Would anyone like to make a motion on this?
I'll move to do the rebalance as shown in the agenda packet.
Motion by Trustee Hamilton and support by Trustee Gordon. Any other discussion? Let's call the motion. Trustee Hamilton.
Yes.
Trustee Gordon.
Yes.
Trustee Bovensup.
Yes.
Trustee Novak.
Yes.
Trustee Miller. Maybe. Trustee Miller?
Sorry, yes.
Yes. Okay. And Trustee Malzik, yes. Vote is 6-0. So Tim, you know what you need to do?
We'll be working on the letters and getting that taken care of with your office, Rob.
Thank you. I appreciate that.
Mhm.
And just so you guys know how that works then is Tim's office will send me a letter with that. I sign it on our letterhead and we get that done within a couple days. So that's how that process works. Anything else, Tim?
I would just say, first of all, Justin, nice working with you. Sorry to see you go, but it's been a lot of fun, and you can say you got through 2020 with the board and put us in really good shape. So you've got that to add to your accolades. But thanks for working. and then for everybody else. Yep.
Time for somebody else.
Thank you. And for everybody else, just stay safe, stay well, have a great holiday. It's going to be a different one, I know, but and I look forward to seeing you all in person in 2021. So thank you.
Thank you. Okay, thanks, Tim, and thanks, Darren. If you guys want to leave, I think we're all set with you. We just have 2 really small things left to do.
Thank you for your attention.
Thanks, everybody.
Today. Yeah, thank you.
All right, thanks,
Bye-bye.
Darren.
Yeah.
Bye, Tim. All right, I just want to bring one other thing up to you guys. It's been since 2006 since we've done an experience study for actuarially. And so I talked to our actuary, and he thought it was a great idea for us once we do our normal valuation for 2020, which would be mid-year in June or so, that we would do an experience study. And if you're wondering, well, gosh, why haven't we done one since 2006? The 2 biggest driving factors are investment return, and we've always been conservative at 6.5%. And the second thing has been that the mortality assumptions, and we've been changing those ongoing, and we have the latest mortality rates updated. But Public Act 202 from the state of Michigan requires us to do every 5 years, we have to do a formal study. So we, both Jeff, Tebow, and myself thought it'd be a great time to do this. So I just wanted to let the board know that would be coming after we get our valuation, probably mid-year. Lisa, isn't that about when we get done, I would say? Yeah, mid-year. Does anyone have any questions on that?
Hey, Rob.
Yeah.
It's Tom. What's typically called out in the report in the valuation?
I'm sorry, can you repeat that?
What's included in this report?
In the experience study?
What's included in
He's just trying to say what is the report. I think our the whole connection's gone bad.
Right. So the evaluation study would cover, we'll look at what we've experienced in our investment return versus our assumption of 6.5. And we'll look at the length of life that our participants are living, the mortality tables compared to what we have versus what's actually happening. And then they'll look at, active employees. We have an assumption of, let's say, 2.5% raises. What are those actual raises? So they'll go through and look at all the attributes of what's actually happening in the plan versus what the actuary is assuming. Does that make sense?
Yes, but the sound for you sounds really distorted. So, but I could still understand it, but it was weird. I don't know if everyone's hearing that. But.
Okay. My sound is bad.
Like a weird robotic monster sound, but I could still understand it. So I don't know if everyone can though.
Yeah. Okay.
Don't we typically skip the January meeting? Or I know usually Chairman Kalis leads that, or am I remembering that correctly?
Lisa, do you want to comment?
I believe last year we did cancel it, or did we change the date? I don't remember. And that was typically because of the reports weren't ready as when our meeting was scheduled.
Okay,
Yes.
that's fine.
We're going to probably have it though, Councilman, because we're going to have a couple of retirements.
Sounds good.
Am I still coming across wrong? Or bad? That's all I had, and I guess we'll adjourn.
I just want to say, Justin, it was great to work with you these last few years. You've done a great job. You've definitely provided a lot of unique perspective that has definitely kind of changed a lot of our strategies on this board, especially with how the strategy in particular for funding the payments we have to make every year. So I just want to thank you for your contribution, and you'll be missed, but I'm sure it'll be in good hands in the future.
Oh, Pete, appreciate it. Pete's a good fella. He'll do well filling my shoes. I appreciate it, everybody. Learned a lot. Thank you for your patience as this knuckle dragging cop tried to wander his way through the. I'm not dead. I'm here. If you need anything, let me know.
Yeah, if you ever come up with anything you'd like the board to consider, you can always contact us, and we'll deliberate it.
I'll move to adjourn.